These are 10 California laws taking effect in 2026 that will directly impact seniors' finances, healthcare, housing, and everyday life. Some will save you money and others could cost you thousands if you're not prepared. Law number 1. Medi-Cal asset limits are back. If you're on Medi-Cal, listen carefully. California eliminated asset limits in January 2024, giving seniors breathing room to save money, but that's ending. On January 1, 2026, asset limits return at $130,000 for individuals and $195,000 for couples. When your Medi-Cal renews in 2026 and you have more than $130,000 in countable assets, you'll lose coverage. Countable assets include bank accounts, cash, property beyond your primary home and one car, interest, rental income, and dividends. The old limit was $2,000 for individuals and $3,000 for couples, unchanged since the 1980s. The new $130,000 limit is better, but it's still a hard cap, forcing some people to spend down assets or lose coverage. Current enrollees don't need to report assets until their first renewal in 2026, while new applicants must meet the limit immediately. Any asset transfers between January 1, 2024 and December 31, 2025 won't count in 2026 reviews, but transfers after January 1 could trigger penalties if you need nursing home care with a 30-month look-back period. Count your assets. Close to $130,000 means you need a plan before your renewal comes up. Law number 2. Proposition 19 property tax transfers. If you're 55 or older and thinking about moving, Proposition 19 could save you thousands in property taxes, but if you're leaving your home to your kids, this same law could cost them thousands. Before Proposition 19, you could only transfer your low property tax base once in your life, only within the same county or 10 specific counties, and only for a home of equal or lesser value. Proposition 19 changed everything. You can now move anywhere in California taking your tax base with you, do it 3 times in your lifetime, and even buy a more expensive home. When you buy pricier, you transfer your old tax base plus the difference. Picture this. Your old home sells for $600,000 but your taxable value is $200,000. You buy new for $800,000, and your new taxable value becomes $400,000, saving thousands every year. You have 2 years before or after selling to complete the move. Both homes must be your primary residence, and you file with the county assessor. Here's the downside. The parent-child property tax exclusion is mostly gone. Children inheriting now only keep low property taxes if they move in and make it their primary residence, and only on the first $1 million of value. A Sunnyvale family saw taxes jump from $1,300 to $18,000 annually after inheriting, and they couldn't keep the house. Law number 3. Driver's license renewal at 70. More than 3.3 million California drivers are 70 or older, and if you're one of them you must renew in person at the DMV every 5 years with no online or mail renewals. You'll need to pass a vision test. Clean driving record means that's all you need, plus a new photo and $35. Points on your license from the last 2 to 3 years mean you'll also take either the written knowledge test or an online e-learning module, and the e-learning is easier because you can't fail it. The DMV can require a road test if they have safety concerns and can place restrictions like corrective lenses, daylight driving only, or limited radius from home. Plan ahead by making an appointment, bringing your license and $35, and getting your eyes checked if you're worried about the vision test. Law number 4. Social Security and SSI increases. The federal government announced a 2.8% cost of living adjustment for 2026, where Social Security beneficiaries see the increase in January and SSI recipients get theirs December 31, 2025. For SSI in California, the federal portion increases $22 for individuals and $33 for couples, but the state portion gets no increase since California eliminated the annual state COLA in 2009 and never brought it back. The combined SSI and SSP grant for individuals sits at 92.5% of the federal poverty level now, dropping to 90.54% in 2026. People on SSI are living below the poverty line. Housing makes this worse. Between 2013 and 2025, California rents went up 94% for efficiency units while SSI grants only went up 38%, and most SSI recipients live in the most expensive counties where rent takes between 61 and 253% of their monthly grant. Law number 5. In-home supportive services. IHSS helps more than 770,000 Californians stay home instead of going to nursing facilities. Age 65 or older, blind, or disabled and need help with bathing, cooking, or housework, IHSS can pay for a caregiver. You need Medi-Cal and income below about $1,207 a month. Right now there's no asset limit, but remember Medi-Cal is bringing back asset limits January 1, 2026 at $130,000. Over that, when your Medi-Cal renews means you lose Medi-Cal and you lose IHSS. The average recipient gets 124 hours of help per month. IHSS covers personal care, domestic services like cleaning and shopping, and protective supervision for people with dementia. Provider wages in LA County are $18.50 an hour now, increasing to $18.90 in January. Apply through your county social services office where the process takes 30 to 45 days and is free. Law number 6. Rent Control Protections. AB 1482, the Tenant Protection Act, limits rent increases and requires just cause for evictions. It applies to most properties built before 2005 and runs through 2030. Rent increases are capped at 5% plus local inflation or 10% total, whichever is lower. For August 2025 through July 2026, Los Angeles County is about 8%, San Diego 8.8%, Berkeley 6.3%, while the city of Los Angeles has its own 3% cap. Landlords can raise rent once or twice yearly but can't exceed the annual cap. When you move out, they can reset to market rate. After 12 months, landlords need valid reasons to evict, where at-fault reasons include non-payment or lease violations, and no-fault reasons include owner move-in or major renovations. No-fault evictions require 1 month's rent as relocation payment within 15 days. Keep records if your landlord violates these rules because the law protects you. Law number 7. Insulin Cost Cap. California caps insulin copays at $35 for a 30-day supply starting January 1, 2026 for large group health plans, while small group plans get the cap January 1, 2027. The law bans step therapy for insulin and eliminates deductibles on many plans. California also sells state-branded insulin through CalRx for about $11 per pen. For seniors managing diabetes on fixed incomes, a $35 cap removes a major barrier. Check with your insurance in January to confirm coverage, and remember Medicare has its own $35 cap that started in 2023. Law number 8. Federal estate tax exemption cut. California has no state estate tax, but federal estate tax still applies. Right now you can pass $13.99 million tax-free or $27.98 million for married couples. On January 1, 2026, that drops to about $7 million per person or $14 million for couples where everything over that gets taxed at 40%. Own California real estate, have retirement savings, or own a business, and assets add up fast. A house in a good neighborhood plus retirement accounts could easily exceed $7 million. You can make gifts now to reduce your estate, where the annual gift tax exclusion is $19,000 per person in 2026, and married couples can give $38,000 per recipient per year. You can also set up irrevocable trusts. Estate might exceed $7 million means talk to an estate planning attorney before July 2025. Law number 9. Housing and rental rules. Starting January 1, 2026, all California rental apartments must come with a working refrigerator and stove, which wasn't required before. California is banning thicker plastic grocery bags that replace the thin ones, where stores can only give recycled paper bags for at least 10 cents each. Food delivery platforms must give full refunds for undelivered or wrong orders and provide drivers itemized pay breakdowns. Starting July 2026, restaurants must list major food allergens on menus including milk, eggs, fish, shellfish, tree nuts, peanuts, wheat, and soybeans. Law number 10. Minimum wage and workplace rights. California's minimum wage increases to $16.90 per hour January 1, 2026, while exempt employees must earn at least $70,304 annually. The Workplace Know Your Rights Act requires employers to give written notice of worker rights when hired and annually, with penalties reaching $500 per employee per violation. Paid family leave expands to cover designated persons beyond family, and unpaid wage judgments now carry penalties up to 3 times the amount owed if unpaid after 180 days. Pay equity rules require detailed reporting where employers must keep demographic data separate from personnel files. Conclusion: these 10 laws directly affect seniors' financial security in California. Medi-Cal asset limits return at $130,000. Proposition 19 changes property taxes for movers and heirs. License renewals at 70 required DMV visits. SSI grants fall further below the poverty level. IHSS helps you stay home but depends on Medi-Cal. Rent control protects tenants from big increases. Insulin caps at $35. Estate tax exemptions drop by half. Housing rules require appliances, and minimum wage and workplace laws expand protections. Check your assets before your Medi-Cal renewal. Look into Proposition 19 if you're over 55 and moving. Plan that DMV visit if you're 70 or older. Know your tenant rights, check insulin coverage, and talk to an estate attorney if needed. Stay informed, know how changes affect you, and plan ahead. Don't wait until you're losing coverage or facing tax bills, because acting now while you have options makes all the difference.